But we were talking about the sector that's outperforming. That's the PSU banking space. And Bank of Baroda is the one on our radar. They have unveiled a new festive campaign. To understand more about that, as well as business prospects, we're joined by Mr. Joydeep Dutta, the Executive Director at Bank of Baroda, who joins us on the show. Hi, Mr. Roy. Good morning. Thanks so much for joining in. Well, I'm looking through this offer that you've put out. You seem to be focusing on both the liability side as well as the asset side in this festive offer. What are the offers? And what kind of response are you expecting to see from this?
Thank you. Thank you for also having me on the show. Of course, festival season is traditionally a season where we see see an increase in the growth rates from the previous quarters. This year definitely will be no different. The demand outside is quite buoyant. We are seeing a uptick in the consumption, etc., happening, the spending as we get into the festival season. So that coinciding with all of that, we have brought out this festival season package, which will run up to the 31st of December for a period of 4 months. And we expect to do definitely around a 15 to 20% higher growth than the previous quarter and than the previous festival packages that we have given in the past. Sure. This is a comprehensive package. Yeah.
Got it. So, sorry, is this, Joydeep, this 15 to 20% growth is you're talking about in credit growth, and that's in this particular quarter, is it?
Yes. From the previous quarter.
Okay, from the previous quarter. Got it. What does this mean in terms of specific segments? Just trying to understand, where are you seeing maximum traction coming from? Whether it is in the personal loan space, or in autos, in generally in retail, in corporates. Where are you seeing maximum traction coming from this festive season? And would this change your, full year outlook in terms of both credit growth, deposit growth, etc.?
So the maximum traction, of course, is in the retail segment. So we have been growing at around plus 20% levels over the last couple of years. Actually, that's above industry. The industry has been growing retail at around even 20% levels in the industry. Also, we have grown almost 3 to 4% higher than industry. So from that perspective, I think we think we would be able to continue that sort of a momentum as far as the retail space is concerned. That's the fastest growing segment as I look at it, even for our bank. So this festive season should definitely see a higher sort of uptick, more from the economic factors which are playing out outside, the economic consumption and all of that. And plus, at the same time, I think our package and the concessions, etc., that we have built in, we should be able to take a much larger growth rate here.
So you're saying that the bigger traction is coming in the retail side, and retail, I think, overall is about 25% of your overall book. Would this also mean a rise in unsecured loans? Because this is something that the RBI has, spoken about as well, that they are concerned about the sector seeing a rise in unsecured loans. Just wanted to understand, what is the percentage of unsecured loans in your entire loan mix? And given that retail is picking up, do you see any kind of pressure in terms of asset quality, etc.?
So unsecured loan for us, of course, is the highest growing in terms of percentage terms. But I think we are at a lower base, number one. And number two, the type of personal loans that we do in the bank is more to our existing customers. And it's largely digitally driven with a lot of underwriting based on data-based underwriting, etc., which is happening, which makes our personal loan book a lot secure. So from that perspective, even though the growth rates in the personal loans is higher, but I don't see any sort of issue around that, largely because it's to our own customer base that we are actually penetrating. So amongst the personal loan,
Yeah. So basically, you've seen the customer behavior. You've seen, so you know who you're lending to, basically. These are not new customers. They've taken other loans and they've serviced it over a cycle. So in that sense, there is comfort. Mr. Ray, hi, good morning. Mr. Roy, good morning. Prashant here. So just a couple of questions. On the so this 20, I think the retail loans are, as a percentage of overall advances are about 20, just under 25%. Where will this be? Because you are far behind. I mean, your peers. You take SBI as an example, much larger player, or you take some of the private sector leaders. Will this be the focus point? Where will this be, say, 2-3 years down the line? This number.
So even the bank's sort of thought process is on growing the retail book faster, and that is why you see our growth that has been happening. We are growing around 3 to 4% higher than industry on the retail side. So our market share also is growing on the retail side much faster than in the other segments. Even in the loan composition that we have, the loan composition right now, of course, is tilted on the higher side for corporate. But next
Mr. Roy,
2, 3, 4 years down the line,
SBI is at 42%. Would your aspiration be to go from 23 right now to what? And by when? Is there an internal kind of roadmap?
Yeah, so even our roadmap is to get into a loan composition which is roughly around 40-60 to start with, and of course taking it even further maybe with time. But the idea is to directionally we are moving there.
All right, Mr. Roy, just for this year, that's for FY24, the overall credit growth should be in mid-teens, around 15%. That will be led by retail. Is that something that you should be sticking to?
Yeah, so roughly we see a credit growth of around 14 to 15% overall.
Got it.
And
all right.
On the retail side, it would be plus 20% definitely.
Got it. And I also wanted to confirm your NIMs. The guidance I think was around 3.3%. Or do you stick to that?
So we had given a guidance of around of doing a similar kind of a NIM which was there for the full year last year. So there could be some inter-quarter sort of plus minuses, but for a full year NIM, we stick to a near about NIM of which we had last year, which was around that 3.3 levels.
Okay, all right. And just wanted to ask you, with regard to recovery and upgrades, I think in the first quarter, the number was around 2,500, 2,600 crores. For the year, I think you were guiding for 12,000 crores. That as well holds, right?
That also holds, definitely.
Got it.
Okay, I think that summarizes everything. Thanks a lot for joining in. And
one more question, Sonia. Just another segment which you've been focusing on is the MSME segment, right? Now, but I think the slippage levels in that segment are pretty high. I think you're going on opening dedicated branches, dedicated infrastructure, personnel, etc. So a big thrust there. So what's the game plan, and what's your exposure in that space, and what do you want to do in the MSME space?
So MSMEs, of course, in terms of overall economy also, if you look at, this is the space which is actually a growth driver for the country also. And in terms of credit, new to credit to MSME enterprises, the country has still not really seen the type of penetration that should happen. So there's a lot of new to credit enterprises who are now getting into the formal credit mechanisms, and that is a large gap which is getting covered. And in terms of demand and supply, I think there's a large gap that is to be fulfilled from the formal financial sector, including the banking sector. So that is where I see a lot of growth, and even in the bank, I think we are focusing on quality of the underwriting process. We are focusing on clusters. We are focusing on places, geographies where there is a demand. And that is why we have opened up almost 300 MSME branches. We have reclassified some of our existing branches. We have opened up new branches with new manpower, new teams who focus on the quality, who focus on underwriting, who focus on getting new enterprises to come onto the MSME growth path. And that is where I think we will see a sort of a growth in the MSME space also.
Okay, just one final question on the asset quality. You were making a mention of it earlier. In the quarter gone by, actually, your asset quality has, I think, been the best in the last 8 years. So your gross NPAs are at about 3.5% or so. Is there scope to improve asset quality further? And if yes, what is the kind of target that you're looking at in terms of gross NPAs by the end of the year?
So we don't give any guidance on the overall gross NPA numbers, but in terms of the overall slippage ratio and the credit cost, I think there's a guidance. But I think on the NPA numbers also, the trend, we are seeing a downward trend. We probably would see the gross NPA numbers coming down again quarter on quarter. And the net NPA numbers also are now below 1. We definitely would, the endeavor is to keep it at that level below 1 itself.
Okay, all right. All the best. Thanks a lot for joining in and speaking to us. That's Bank of Baroda. A big move actually in a lot of these PSU banks. The stock is now up almost 2.5%. They are seeing a 20% growth in the retail, credit growth in the retail space, and they are looking to keep their net NPAs below 1%. Let's